Hello and welcome everyone. Let's start with today's session. Anyone who will join later can carry on with the middle of the session. So let's start today's session in our stock market analyst course. Now, we all remember we talked about the industry analysis yesterday, how to look at different industries, what to look at, how you can start finding those things. So we looked at quite a bit in detail for that. Now, once we have figured out the industry, then we'll have to look at something which we need to understand the companies at a basic level before we start investing. Does everyone agree with me? Can somebody give me a yes or a thumbs up so that I'll know that we all are on the same page? So, any yeses or thumbs up, please? Is everyone aware that we need to look at the company from very basic level? So I'm saying, I think that yes. So finally, we have got a yes that we understand that before getting into any investment or any company, we need to see the basic level of that company. Now, when I say the basic level of that company, does everyone understand what kind of basic level we are talking about? Can somebody give me a few of the examples in the chat that what kind of things we should be looking at? What is most important for you before you start investing in any company? What would be one thing that you'll be looking at before investing? Can somebody tell me? Inventory level, cash flow, what else we can look for? Financial records, debt level, anything else? Okay, so where do you think we can find all of these about the owners? Fair enough. So we can find different things, return on investment. So for all of this, we need to understand where everything comes from. Now, everything of these sorts come from your financial statements. Um, Many of you might have heard about it. If not, then financial statements are the one where you can find all kind of information about what the company is doing and what their numbers are basically telling you going forward. So that's one thing that we have to be very particular about. Now, let's just say that you are told to look at a financial statement. Which financial statement would you prefer? Can somebody tell me which financial statement would be the first one that you will pick up and look at? Anyone who can tell me? Cash flow, okay. Nikita will look at cash flow. Vanchika will look at profit and loss. Parth will look at balance sheet or P&L. Any other statements that you would be interested in? Or just these three would suffice everything? So basically, let's carry on. So cash flow statement again. So these three are the most important ones. In all fairness, these are the three statements that would be available for almost, or not almost, for every listed company that you can have a look through and you can understand more about the business. Right? So in today's session, what we are going to do is we are going to look at these three particular statements and try to look and find what can be more important for us or what kind of things can make much sense as compared to every other thing. Okay, so let me change the sharing screen with you guys. Just bear with me. So everyone can see a browser now. So for the exercise purpose, what we are going to do is we are going to look at two different companies, and one first company we are going to pick from the Indian market by using screener.in. So everyone is aware of screener, I hope so. So let's pick any company today. Let's pick Eternal. Okay. Now Eternal is first company that we are looking at. Now, if you'll see, there are few things that we are aware of. First is market cap, current price, high and low, stock PE, book value. Everything is a different story. We'll come to that later in later sessions. But before looking at any of those things, this is very important segment that you should be working on. Bear with me. I'm not sure. I think I need to log in for this particular. So if you can see in the about segment will always tell you about the company, which is the first and foremost most important thing that anybody who can or who is looking forward to invest or even trade should know about. Why I am saying this is because if you don't know what kind of company you are investing in or what kind of company you are going to carry on with or stay invested in by keeping your money in that company, you have to know that what kind of company that is, because if you don't know what kind of company that is, how can you be so sure that your money will be safe, right? So if there is a small company, let's say the market capital of this company is 3 lakh crore, very big amount. I guess I am safe in saying that everyone would be keen to hold their amount in this particular company for a long time. They would feel safe about it. But let's say we were talking about there was one person who raised a point about the small cap. Now, let's say there is one company which is only having a market capital of, let's say, 500 crores. Will you be too comfortable with that? I guess not most of the people will be, because if you are going to hold your money in that company for next 5 years or 10 years, are you comfortable at a 5 crore company or a 3 lakh worth crore company? So these are different things that we'll be looking at. But before any of that thing begins, what that company does is very important to look at. Once you understand about their company itself, then we'll move on to the next stage, and that next stage is going to be financial statements. Why I'm not going too much into the about segment, because everyone has their own way of learning about a company. I do not want to set a prejudice against those thought processes that you guys have. I want you to explore your own way of learning about the companies. So that is why I have given you a heads up that this is the first step that you should be following, and not just following anyone who has said something about it. Keep your mind open, try to understand what exactly is happening in this segment. Okay, let's quickly move on to the lower bottom side of the screener itself. Now you can see that these are the quarterly results. These are the quarterly results. I'm sorry, just give me a moment. Let me close Copilot. Okay, so these are the quarterly results, and these quarterly results are very important for us to understand that how the company is doing, because in a nutshell, this is the P&L statement that you all have talked about. Now, this is very important for us to look at. How do you make sense out of it? First, let's have a look at the sales. You can see that sales is constantly growing year on year going forward every quarter. Why is that happening? We can obviously look into that, but this is a good sign that finally the sales are in the right direction. Now let's have a look at the expenses. Instead of looking at the expenses alone, if I just look at the operating profit margins, I can see that they were doing good in terms of from December 2023. They were on a good trajectory, but December 2024, 2025, and June 2025, they faced a lot of pressure. Now, what happened in these 3 quarters? What happened? We need to check that before investing in this, because there might be a scenario where they might not be too much comfortable in their business. They might be having operations losses. Why is that happening? Is it going to come again in the company? Are there any management problems with the company? If it replicated, is this company right for me? So these kind of answers I would definitely be interested in before going forward and trying to decode this. Before saying that sales are good, which means the company is doing good, so I'll go forward with it. But I can see that there was a problem for 3 quarters not too long ago. It was literally 1 year back that they have this kind of problem. So before I give them my money, I need to understand what was the problem, if that can occur again. So that is one thing very important. Now, as you can see that they have got other incomes as well. Now, other incomes, are always holding steady for them since March 2025. So there is not much of the change, as you guys can see. So I'm comfortable with it at this stage, but I would like to know what kind of other expenses, other income they are talking about. It's not mentioned in this one, but we can obviously look into the account reports or annual reports that these companies give. The same goes for interest. Now they are paying quite a big amount for the interest. And the same thing, they are increasing their depreciation over time. Now, to understand depreciation, you need to understand that depreciation is based on what kind of fixed assets do you have, which actually incur depreciation. Their depreciations are going high, which means that their assets should be going higher as well. So if that asset is going higher, which I know is replicated here in a positive sense. So before finalizing on this depreciation, we look at the assets once we start moving now. Now, because our operating margins were low, we can see that their gross margins, gross profit are low as well. And after that tax, they are facing a lot of pressure. Their net profit is very low. As you can see that they made a 20,000 crores worth of sale in June 2026 quarter, but their net profit is only 92 crores in a quarter, which is hardly point 1 sorry 10 paisa in your EPS, which is very less. If I have to convert this into sales percentage, like net profit percentage, it will be almost around 0.003% on a quarterly basis. Is it a good number? Is it a bad number? We have no idea right now, because this is a company which might be having the highest number of profits right now in its own industry. But right now, this number is quite low. So we have to look at the industry overall to understand this. But today we are talking about how we can analyze the company itself from the scratch. We need to understand what kind of things we are looking at. So that's why I'll stick to that point. But I would say that 92 crores of profit at a sale of 20,000 crores is very less. So these are the things that you should be interested in while looking at these kind of statements. And these kind of statements gives you a heads up like what exactly is happening at a broader level before you start investing or before you start diving deep into understanding the company itself. These are the public figures, so they are available everywhere. There is not going to be much of the change, but you can find this anywhere. Now let's move on to the annual statement. So they also provide the annual statement for this on screener. Now let's have a look. So we can see from March 2020, there was a drop in March 2021. Now I know why that drop can be there, because it was a COVID season. So this COVID season explains the drop. So I'm not too worried about it. I understand that this was the blip because of the COVID. There was one anomaly which happened for everyone. So they saw the dip. So that's completely fine. But since March 2022 till 2026, they are on constant growth, but they are almost doubling what they are doing since March 2022. Is this the right number? I have doubts. Definitely, I would love to see much more in detail why their numbers are almost getting doubled year on year, because that is highly unlikely that any business can retain this much amount of growth for last 5 years. So that's one thing I would be very particular about. I would definitely love to see why these numbers are growing in a way that they are. So before you start investing, it would be a nice habit to look at these kind of figures in a way where you can see that some figures are not making sense. So the moment you look at the operating profit, you can see that since the start, since 2018, it has been in loss for next 5 years. That is till 2023. Now, from 2024 onwards, they have finally started changing these numbers and they have made themselves profitable. Are these actual numbers, or is there anything that they have accounted for which shouldn't be there? Because they have booked a loss for last 6 years. So before finalizing that these numbers are right, what kind of things have gone into this, I would be very much interested in this particular side of it, that why these numbers are there. Because straightforward, after 6 years of loss, that to sixth year loss was 1,211, not a small amount, and they have substantially dropped it down in the next year by making it positive. So I need to understand what exactly happened within this 1 year that they were able to turn it around before getting to the fact that there might be something positive or a negative. So very much will look into this before going forward. Then I would look at profit before tax and profit after tax, which is your net profit. As you can see, net profit again till 2023 was negative for the company itself. But from 2024 onwards, they have suddenly changed the direction, that too in a very heavy sense. So before you guys decide, this is one thing that you would definitely would like to know by just looking at an overall view from one of the third party platforms, that these numbers doesn't align where I want them to be. Everyone clear with this? So let's move on to the next part. Now the next part is very important for you guys to look at, and that is the balance sheet. Now let's have a look at the balance sheet. Balance sheet, we talked about the depreciation going higher in this segment. So you can see that quarterly your depreciation was going higher. Now let's have a look at in the annual side of it. Again, it has almost gone double every year since 2022. So again, problematic situation. Now let's have a look at their fixed asset. Has their fixed asset grown at the same rate? No. I can see that there was no increase from 2023 to 2024. They heavily invested from 2022 to 2023. That I can agree that their depreciation has gone higher. Agreed. But why did it go higher in 2024? Yet to be seen. 2025, overall, I can see that they increased their assets by 50%, but their depreciation has gone up by 100%, which is almost double what you are expecting. And the same story goes here. So all of these things doesn't compile, doesn't make sense overall. So before you go into any of these substantial understanding, you need to understand what the assets are comprised of. Now that's the biggest problem that I can see. So they have a quite a high number of intangible assets. Now in these intangible assets, there is no depreciation. Then we have to discount for these needs to be removed from here. But I can see that their buildings are getting higher and higher, and they are facing almost double to triple amount of jump for every year. So as you can see in plant and machinery, they were sitting at 192 versus 585 versus 140 1497, which is a substantial jump from where they started in 2024. And if you look at the building, it's the same story. So 800 to 25 to 55. Now I know why their depreciations are going up at an exponential rate. By just looking at overall numbers, this didn't make sense. But the moment I expanded this situation, I know why it made sense out of the blue. So these kind of things are very important when you are reading a financial statement. You need to understand why you are looking at these numbers and what these numbers actually mean. Because overall, you can look at the numbers, but they can't tell you the whole story till the time you dip a little bit, you basically dive a little bit deeper to understand what exactly is happening. Okay, so let's move on to fixed asset to liabilities now. But before I do that, you can obviously see that they have been making a lot of investments. Now, these investments I would be definitely interested in. Why? Because if I am giving them the money, let's say I have given them 10,000 rupees as an investment in their shares, what are they going to do with that 10,000 shares? That is very important for me to find out, because I can see that they have very big investments. They don't even have fixed assets of that much amount. So what is the problem? Why they are investing this money? Are they not trusting their own business to grow? Then why do they have their investments higher than their own fixed asset where they need to actually run the business for? So that is a very big negative statement in this particular scenario, what I can see. So that is one thing I would be definitely interested in, to know that why it is happening and what it is happening for. Now let's have a look at the other assets. You can see that their inventories has grown quite a lot in this year. Are they facing any problem? What is happening? Because earlier they were not retaining that much, but suddenly they have started retaining so much. What is happening? Why they are doing?
And as you can see, there is a big problem with the cash equivalent as well. That their cash, they were actually, when they were making losses, they were actually retaining more of cash as compared to now they have finally turned into profit and they're retaining less of the cash. So where is the cash going? Very important to look at. Now, as you can see, loans and advances, they are even giving loans in the market as well. Why are they doing it? You have to understand, because it's not that easy that you can just go ahead and see and tell like this is going to happen and that is what you are being told. So these kind of small little things always make a lot of difference, that the how company is going to perform going forward. If you are going to skip over this part, you can never understand. If let's say you invested in Eternals today at 10,000 rupees, tomorrow it drops down because they were basically diluting their investment, which is also dropping their profit as a overall company. Now the share prices will drop, your 10,000 will become 5,000. Will you be comfortable with that? No. Why you're not comfortable with that? Because you put your money into this company by looking at overall numbers, they were looking fine, everything was fine, but you didn't deep dive into it, or you never knew how to read the financial statements to understand that okay, this was wrong with this company, but you still went ahead, you made the investment, now you're sitting at a loss. And you would never be able to get why you are sitting at a loss, because you did skip over some of the things which were important, and that's why you missed it. Now if I look at the company's liabilities, because now we have looked at the assets altogether, different assets, different stories. Now let's look at the liability side of it. Can you see that their reserves are increasing? We can see that their reserves are increasing quite a lot. Why are they keeping reserves? Very important to find out. And that to this high, their reserves are more than their fixed assets. Why they are holding everything in reserves right now, that I need to understand. And at the same stage, I can see that their borrowings have gone double. And that too in terms of their lease liabilities. Are they able to sustain these lease liabilities? Because that is a very big amount, which I need to know why they are increasing their lease liabilities. Are they making enough sales to cover these liabilities? Are they becoming profitable? Yet to be seen, because we have seen that they have finally made a little bit of profit, but their lease liabilities has gone quite a bit high, and their cash reserves are going down. So these three things combined can tell me that there might be some kind of operational problems or operational limitation that this company is facing. That's very big important thing to look into their annual reports. After looking at this, like what exactly were they trying to do and what exactly is happening? So these kind of questions can be asked from this particular thing. So lease liability means, so lease liabilities can be anything that is regarding what kind of lease you are taking for your own places. So I guess you are aware of Eternal having too many dark stores nowadays, because they are leasing those properties. They are not buying those properties, they are leasing. So that is their lease liability that they have to uphold, which means that they are going to keep on paying for this, for those liabilities, for those lease that they have taken, and that should be where the lease liabilities are recorded. I hope that answer your question part. So let's move on to the next slide. So these are the balance sheets that we have understood. So we have covered two of the things so far in terms of financial statements. Now this is the third and another important one, which is the cash flow statement. Now, if you'll see in the cash flow from 2020 till 2022, for 2 years, they were cash positive. In March 2023, they went cash negative. Then after that, in 2025 and 2026, they have finally turned cash positive, which means a positive thing, right? If I have to ask you, everyone would say the same, that finally they are in a cash positive situation, so they are doing good. Actually, hold on to your thoughts, because if you look at the operation activity for these 4 years and these 2 years where they were even positive, they were actually making negative cash from their operating activities, which means that they were not at all doing good when we talked about their operating activities, which means they were not efficiently running their business. They were actually losing money there. Now, if you'll see in the investing activities, they have finally made some cash here in 2026. But the biggest problem is that their investment investing activities has given me the positive cash flow. So what happened? I purchased, but I sold a very big investment. Now, why do I sell this big investment? I have to see. Why is Eternal selling this much worth of investments? Why do they need money from selling an investment? I need to understand, because otherwise I would never know that how they are running their business, whether it is some kind of business that I'm comfortable putting my money in. So very important factor to look at. Otherwise, you can always be left in the dark where you cannot understand, like, why did it happen? So very important. The moment you start going a little bit deeper, you would like to see all of these numbers making sense to you. Now let's have a look at the financing activity. So if you know that this 330 is there, and if I'll remove this number from here, I am overall negative, which means I didn't have the cash to begin with, but I made cash because I sold something off. Now, what was that? Why am I selling something off to get cash on my reports? Very important factor to look at. Now, let's have a look at the financing activities. What's happening with financing activities? I can see that we are in negative. So we are paying interest on that, which is our biggest negative. And the first biggest is financial liabilities. It can be different things. Many different companies include different things in this side. So financial activities, if it is negative, that is completely fine, because there are many financial obligations that company has in a form of a debt, which they are slowly paying off. So it always retain there. It always comes as almost negative till the time you haven't taken any loan. Otherwise, it will be negative. So you can see 8,400. There might be some kind of a loan or a debt. So proceed from shares. So you actually got dividends from the shares that you own. So that is why it is showing here. But what happened to this dividend in this particular year? Is that company not paying any more dividends? Maybe if I can find out, maybe it can tell me a better picture. But overall, I'll be satisfied with looking at this number. So these three, we have looked at just three statements right now. And we have figured out so many things by just looking at these three statements in 15 minutes of our session. Is everyone clear on these things that we have just talked about? Can I get a yes or a thumbs up or no, or any questions that you have so far? We only took 15 minutes for this company, 15 or maybe 20 minutes at the max. We looked at three important financial statements. We worked around for so many things that can give us a brief heads up that what exactly is happening with this company. So I can see that we are all clear with this. Now we understand why these things are very important. Sir, according to you, how much EPS is good or generally best or normal? So EPS, I would answer one thing part for you, that EPS, again, we'll look it into later sessions when we talked about ratios and all the other things. But if I have to give you a good answer for this, that how much EPS is good, there is no fixed answer. Why I am saying that is because all the different sectors, all the different industries, all the different segments that you can pinpoint will have different level of good EPS for them. Let's say if we talk about FMCG company, which is consumables, which is normal consumer staples, their cash holding will always be higher than a tech company who is doing some kind of research and development. So their earning per share can also be different based on how much and what kind of sales they are making and how much they are able to retain. So that way you cannot normalize one EPS for all kind of companies or all kind of sectors or all kind of industries at all, because you have to set different standards for every different industry. Not just that, we talked about the geopolitical reasons. We talked about different geology making an impact on the company's behavior and the growth of it. Why that is important? Because even if I'll talk about today in India versus US today, the same consumer staples can have a different EPS level that they might be retaining. Which one do you think is better? You need to understand the market that you are studying. So if I talk about consumer staples for US, let's say their EPS is somewhere around 5% versus your EPS in India is 8%. That doesn't mean that US is giving you low. That means that industry, that segment might be a little bit at a maturity stage. That is why it is giving you low, but they are far more stable as compared to what Indian consumer staple market is. So there can be different explanation. There is no fixed answer for it. It's just that you keep on working on with the numbers which you are aware of. So you start making sense. You start understanding the industry, the sector. Then you look forward to get into the aspect of looking at individual companies. So that answers your question, I hope. Okay, so let's move on to the next one more company as an example. Actually, I've got another question. Sir, could you please do analysis on... Okay, so you want one analysis for this particular company. Okay, so first and foremost, we can see that there is a market cap of 3,981 crores. Quite small for the risk that it will entail. It's one of the companies that I would stay clear from because it has got very low market capital right now. So one red flag for me. But again, I'll do the whole understanding of this business. Let's see where we get and what kind of company this turns out to be just by looking at the overall broader concept. Now, it is an industrial gases limited, is engaged in business of oxygen and nitrogen. The company is a manufacturer and supplier of industrial gases. The same story goes, 100% Indian owned, and it is the largest 100% Indian owned. It is asking me to do a login, so I'll keep it at that. But the price action for this company doesn't look too good. In all fairness, let me see a maximum of this. So they have been there for 2009, and basically they are sitting at the same price level where they were at in 2009 itself. There might be some kind of a problem, so might not be too keen, but let's have a look at their numbers as well. So according to Screener, company has reduced debt. Company has delivered good profit growth over the last 5 years. That's a plus. But though the company is reporting reported profit, it is not paying out dividends. And earnings include an other income of 50 crores because this is a very small company. So 50 crores can make a lot of difference. Let's have a look. Sorry. Now let's move on to the quarterly results. I can see that for last 2 years straight, from June 2024 till March 2026, it hasn't shown any growth in their sales. That's a red flag for me personally. Now, if I look at the operating profit, their expenses were deviating quite a lot, even though their sales were not increasing. Doesn't make quite a lot of sense. So I would suggest looking into their annual statements to understand why this thing is happening. So that's one thing I will definitely look at. Their other income quarterly are increased from 2024. I would be interested in that. Why is that happening? The depreciation is low. That is fine. They are still able to maintain their net profit positive, but it has dropped in last 3 quarters. Why did this happen? Versus why it just got doubled in 1 quarter? Because it is a small scale company, so there might be many different small things which are happening which you might be interested in knowing, like why these numbers are fluctuating so much. Now let's have a look at their annual statement. Now their annual one is increasing or staying constant. So you can see that for 2 years it remains constant, in 3 years it remained constant, then a small growth, and again got constant again. Very big problem. I would definitely highlight March 2023 this year, where their operating profit actually fell by almost double and then went up to double again. What happened here? Very big question mark. I would definitely love to understand. Now, if I see, so, okay, there was the 50 crore worth of net income, it is almost your net profit of 50%. So it is comprising your net 50% of your operating profit, which is quite high. I'm very skeptical about this number. Like, what are they depicting here? Then, if you'll go beyond that thing, your net profit tells you the same picture after tax. Very questionable kind of numbers, because in 2020 they were this, 2024, 2021 they were down to only one fourth. What happened? Why it happened? I know that there was COVID, I can understand, but it dropped to one fourth, which is a very big drop. Is company doing something wrong? Are they not able to maintain it? Because the same thing happened in 2023 as well. So big questions to be asked, big questions to be answered in terms of by looking at their annual reports and whatnot. Let's quickly have a look at their balance sheet. Okay, so they were having quite high borrowings before. They paid off everything till 2022, but suddenly jump back up. Why do they need more of this when I can see that there is not a substantial jump, even though borrowings got up? Very big red flag, because I can see that they actually took money, but they did not invest it in their assets. Actually, they invested in their investments by taking loans. That is where the money went. Why are they doing investments so high when their assets are, even again, the same story goes, is almost similar as their fixed asset? Are they not trusting their own business? Are they having second thoughts that what will happen to their business? Very big question to be asked. Then, if we look at the other assets to understand the cash, they practically had no cash for 2 years. Where they are using their cash, that is a very big negative point that they have. And how suddenly they have built a 72 crores worth of cash. I would be very much interested in knowing where this cash is coming from. Loans and advances, why have suddenly they given out so much loans and advances in different markets outside? Definitely question worth asking. Everything is okay in this. Quickly, let's have a look at the cash flow. As you can see, their operating activities, actually, let's close this. So I can see that they made quite a lot of cash in this year. Profit from operations, what was happening with the profit before? Why it was not increasing? What was the efficiency that they were lacking? Have they countered that efficiency right now? Are they heading into the right direction that they can sustain these kind of cash from these numbers? So that's one thing. I've got another question. Let me just look at the question. Sir, means they are not trusting their own business and investing outside business. Yes, that is why I'm saying that this question is worth looking in, because if they are not investing the money that they are making in their own company, if they are not investing that money in your own company, then why do you are investing outside? Because if you are trusting your own company, why not invest within yourself? So a kind of a red flag that I would definitely investigate. They might be getting better propositions outside by not trusting their own business, is something of a kind of a red flag according to me. So question worth asking. Let's quickly move on to the investing activity. I can see that they are purchasing fixed asset. Are they on the right track? Are they able to sustain this? They have purchased investment even more. See, that is what I was raising. As you can see, your fixed assets purchased are lower than your investment purchase for last 3 years. Why is that so? Why am I buying more investment as compared to fixed asset to grow my own business? Are they having second doubts? What are they facing with this? So questions worth asking. Then from your financing, they are actually making 305, which means they are taking more borrowings. As you can see that they are taking borrowings as well for last 4 years straight instead of repayment. So why am I taking more borrowings going forward? I need to understand before I can even start commenting on this. Because I haven't repaid anything for last 3 years, but I constantly took loans for 4 years. Where did that money go? I can see I invested more in the investment activity, that too in buying investments, but not my fixed asset that much. Why? What is happening? Why? Or what exactly is the company doing wrong? So these kind of questions should automatically come to your mind when you talk about a company's financial statement. It's just a very basic, thorough search that we did. Right now, we only looked at this company for 10-15 minutes, and we already know the questions that we have to ask. So that is why reading financial statement is much more important as compared to what you can analyze, because there might not be a need for analyzing that company altogether if you know that their financial statement doesn't look right. So these kind of things that you should be concerned about, that you should be actually following it up on. I hope I am clear with these two examples. So we talked about two examples. That is what we wanted to do today. Now, has anyone got any questions for me now? Anybody having any questions, any thoughts that they want to put forward in front of the group or any of that? Is everyone clear what we have learned today so far? Can somebody give me a yes in the group, please? So our next class is going to be based on the ratio analysis. It's not just one ratio that we'll be doing, that is PE and ROE. Actually, we'll look at a few more ratios which are actually important in understanding the business altogether. Not just those two, because I know there has been a mindset of people who just tell you, look at the PE and look at the return on equity, and that is the amount that you'll get, that you'll make. But that is not right. Because if the company, for example, let's have too much of a debt on them, then your return on equity would always be higher, because you are making good amount of money which is distributed for less people in equity, which means your return on equity is higher. But that doesn't mean that you are getting more money, which means that they are also paying high interest. They have got high risk sitting on them to fulfill their business obligations. So it is always not the right thing or wrong thing. Again, these are all subjective looking at the company, but as of now, you need to understand before looking at those numbers, is there a financial or a fundamental problem with the company by looking at just three statements? If you can do that, then you know that these kind of companies can actually make do with it. So if nobody has a question, let me quickly ask you, do you want me to look at one more company within 5 minutes? Can somebody give me any suggestions that they want to look at? S. Chand. Give me a little bit better company. S. Chand is too small to look at. Give me a little bit better company, not kind of like a gambling stock. I don't want to look at those gambling stocks. Link, again, that's fine. Wilson Solar, Mazagon, Navneet, Sterling Wilson, Fair. Why not we look at this company? Has everyone heard about Waaree Energies? Okay, we have got two or three saying yes. So let's quickly have a look at this. I'm not going to get too much into detail with this company. I would skip few of the things from the top. So please bear with me. Try to catch up. So again, it's something of a renewable energy company. So that is completely fine. So we know that company is the largest non-Chinese market leader in India. Everything is fine that we are aware of. 77,000 crore worth of company. Completely fine with it. Their chart looks okay because it has been recently listed. So it looks like this. So almost fine with it. Let's quickly go in the side of quarterly. We can see that they have been growing till March 2026, but their 2026 June results are a little bit problem. I would highlight that. What happened to their other income in December 2025? Worth looking. Why their interest income has suddenly gone up in these 2 quarters? Definitely worth looking. Where did their money, not interest income, actually interest expense, have they taken more loan? And if they have, why have they taken more loans? So very important factor to look at. Overall, their numbers look okay in terms of percentages. They are looking fine, but there is a drop, quite a substantial drop in net profit for last quarter. Why is that so? What is wrong? What are they doing wrong? Overall, in year to year, 2026 was exceptional because they grew by 100%. I would definitely question what happened. The same story goes for their other income. Their other income is holding steady, but it was quite high in 2024, worth looking at. Then their interest income has gone, interest expense has gone up again. So why is that? Are they taking more loans? Need to see that. Depreciation has gone up. Their fixed assets should be going up higher at the same rate. I would definitely question. Then if you look at the balance sheet, you can see that their reserves are going high, which is a positive thing. But why are they higher even compared to their fixed asset? Question to be asked. Then if you look at the borrowings, their borrowings have gone up. As you can see that their short-term and long-term borrowings are both of them high, and they have been climbing since 2023. Are they using it in the right direction? We'll check it in assets. So let's have a look. Their assets are going higher as compared to everything that we have seen, and their investments are holding steady, so which means they are trusting their own business and putting money in their own business. So good sign overall. Now in terms of cash flow statement, let's have a quick look. They have been making cash from their operating activities for quite long, but it has dropped in 2026. Let's have a quick look. Why did that happen? Because their receivables have gone down, so that is fine. They have sold more inventory. That is actually good. So that's one thing that we know of. Then we look at cash flow from investing activities. They are buying the fixed asset for themselves, which is a very good sign. They are also investing outside in the similar manner. Why so much? Again, you can have a look at it. Then financing activity, the same story goes that they are still making money from their financing activities by even repayment of the borrowings. They made quite a big borrowing repayment, but as you can see that they have taken quite a big loan in the same year as well. So question worth asking, if they have taken so much loan, where that amount is going, and if they have paid so much, then why do they need more loan for it? So the cash flow operating fell by 52%. Yes, it did. As we can see, it fell by 50%. Then why did it fail? That is one thing that is worth investing your time in. Are they doing something wrong? Or what is happening? So these kind of stories, you need to understand whether you are getting the cash or not getting the cash. I can see that their inventory has gone up. So which means that they are holding more inventory instead of the cash. So which is a negative side, where you have to invest your energy, that you can see within the 5 minutes of the conversation by just looking at this 3 statements. Again, we took only 5 minutes to look at the third statement by now. And we already know what kind of questions we need to ask, which is very important to understand. I hope I'm clear when we looked at the third company now. Any questions? Or any thoughts? Or are we all clear that what we have learned so far today? Can we get a yes or a thumbs up, please?
Okay, thank you so much all. So are we okay to close off this session if we do not have any questions? So I'll take that as a yes. And what I'll do is I'll leave you guys with the thought that what kind of ratios will be important for you to look at when you are trying to invest in a company. Figure out the important ratios that will be important for you, and we'll pick up this conversation tomorrow. Okay? Thank you so much for joining today, and we'll connect tomorrow at the same time. Thank you.